Professor MoneyPigTrading, former PhD drug researcher, now a trader and data scientist. Today we want to talk about bond crisis and potential tax increase in the United States, and the stock market is going to crash or not. Today is March 23rd, 2021. Just a side note, we're not a registered financial advisor. Please take this as education content and make your own financial investment decision. This is the video market update, and we actually made the last one, which is talk about the current market situation. It's very similar to 2014 and 2016 when the interest rate is going to rise again. And also, we actually just recovered from a crisis. Not to mention, we also have Yellen, who is very hawkish on their from her financial standpoint of view and her action. And now she's the head of the Treasury. Back in 2014, she was the head of the chairwoman of the Federal Reserve. So feel free to check this video for more details. I'll provide the link down below. And we have seen a lot of crazy sector rotation in the past 2 weeks. What happened, the major driving force is the bond continued to be sold off. And when the bond being sold off, the 10-year Treasury yield will start to go up. And that will also help the financial and industrial sector. However, the tech and SPY will be pulled down in that kind of situation. However, when the 10-year yield started to stabilize, we'll see the bonds start to go up, the financial and industrial go down, and the tech and S&P 500 will actually go up. So we're just seeing a lot of this back and forth in the past 2 weeks. Not to mention the COVID cases are getting worse in some parts of Europe and India. And that also affects a lot of reopening names like Disney, cruise line, travel, airline, etc. So yeah, just a lot of moving pieces in the market right now. One thing we have noticed is the past 3 days, the 10-year Treasury yield started to stabilize. Like we mentioned in the previous video, 17 is probably roughly an area that will start to see being stabilized, which is happening. While we're talking after market right now, 10-year yield is traded around $16. Tested the 15-day EMA support. We'll see will continue to pull back down or not. The reason why it's 17 because Federal Reserve mentioned currently the inflation is about 1.7%. But they do expect the inflation will continue to go up at the end of this year because the economy is starting to improve. The reopening is coming from the COVID-19 pandemic. So they do think possibly at the end of this year, we might see like 2.0, 2.1% inflation. So potentially we might see TNX to continue to drive up to $20 level. And that's probably finally we'll see a lot of this bond crisis start to go away, hopefully. And one of the reasons TNX being stabilized is because the Federal Reserve continue to inject liquidity into the market. We can see the red line is actually the bank balance of Fed SOMA account. The more they put into the account, the more liquidity they inject into the market to buy bonds and stabilize the 10-year yield, and therefore stabilize the stock market. And the black line is actually the SPY price. And we can actually see in the last week, like we mentioned, Federal Reserve actually reduced the liquidity by increasing the Fed SOMA account. However, at the end of each month, the last 2 weeks of each month, we usually see the decrease. So possibly we're going to see a decrease here. But however, based on our in-house stock pool bond data, we're seeing this past 2 days, this week so far, the bond purchase has accounted for the following 70% of the following last week. So very likely if this trend continues this week, we're going to see an increase of the Fed SOMA account balance. And that means that probably explains why the 10-year Treasury yield continue to be stabilized. However, while the 10-year Treasury yield being stabilized, there's a really big bearish factor being announced today in the stock market is the Treasury head Yellen and Federal Reserve Chairman Powell actually had a testimony today in the U.S. Congress. Surprise to everyone is Yellen actually mentioned that she plans to raise the corporate tax back to 20% from the current 21% in the United States, and potentially the individual income tax and capital gain tax before they announce $1 trillion of infrastructure plan. So she has been very hawkish, and I've told my members, be careful every time she talks. She can give surprising comments or remarks like we have seen 2014, 2015. And that's what we're seeing this week, yesterday or today, when she talked. And again, she's going to talk again tomorrow with Chairman Powell at 10:30 a.m. Eastern time on March 24, and we provide a link down there. You can take a look with the live link there. You can take a look. We have to see what more details they provide, because talking to several CPA tax professionals, I think everyone agrees that sooner or later Biden administration is going to increase the tax, especially the corporate tax, back to 20%. But the question is when that increase will be effective. Right now, we don't have a lot of details, but it sounds like Yellen might want to make this tax increase effective as this year, 2021. If that is the case, we might see a really sharp pullback to the stock market. We can see the former President Biden, Trump, actually reduce the corporate tax back to 2017 from 28% to 21%, and actually make a lot of U.S. corporate companies be able to buy back more shares and create this tech booms. This is a QQQ as a tech ETF. We can see in 2017 and 2018 has a really nice rally. If that happened, I don't think it will drop back all the way QQQ to 120, but it will definitely create a 10 to 20% decent correction if the tech increase happens sooner than X1 expected. So that's definitely something we need to keep an eye on. But however, like I mentioned, the GDP has been continued to growing in the past few years, and this year we're expecting the Thursday GDP data to be pretty good since we have so much stimulus checks being injected into the market. But however, that can also means the bond market afraid of the inflation will increase. Therefore, they might sell bonds, increase the 10-year Treasury yield, pull down SPY and QQQ to on Thursday GDP data coming out. So yeah, it's definitely something we have to keep an eye on it. And also for SPY, we're noticing every month end, because the Federal Reserve reduced the liquidity injection, month end we usually see a pullback. Combined with all these factors like potential tax increase in the testimony tomorrow, we might see a SPY pull down to this 382, break the EMA support, and to this 373 support. If we continue to break down this level, we might going to have a pretty big correction, potentially going to a bearish market in the short term. So we have to continue to watch the market. And one way to hedge your position is using the VIX, which is indexed to measure how the investors, the fear about the market having pulled down or correction. The higher it is, the more fear in the market, and usually it's a reverse way of moving to the stock market. So when it's SPY pulled down, VX will actually going up. So that can actually provide a pretty expensive way to hedge your portfolio. Definitely something to consider. Yeah, that's a short video for today. I just want to highlight we had a really good long-term investment program on our Discord, with a really good winning rate, 89%, and the average return per trade about 18%. Feel free to check out. And also, we had a really pretty decent swing trading program and a really nice performance, as you can see, with a winning rate and average return per trade. So if you're interested, definitely check us out on www.moneypigtrading.com for our Discord community. And if you haven't followed us on YouTube, Twitter, and Instagram, check us out at MoneyPigTrading. And make sure to like this video and feel free to comment if any question. Thanks for watching. See you next time. Bye-bye.